Why markets sometimes ignore big headlines. One of the most confusing moments in the market is when major piece of news comes out. Everyone expects prices to explode, yet the market barely reacts. The dollar doesn't move the way you thought, gold stays quiet, and crypto barely reacts. In most cases, the news itself isn't the key factor. Many traders overlook that market reactions are shaped by the underlying forces behind the headlines rather than by the headlines themselves. The first thing you have to understand is that market moves are driven by how the news compares to prior expectations rather than by the headlines itself. If everyone already knew something bad or good was coming, then when it actually happens, the market just shrugs and says, "Yeah, we saw that coming." That's why a major report sometimes comes out and nothing changes because it was already priced in. And that's exactly where beginners get confused, while the pros nod and say, the market was already ahead of it. The second layer is positioning, and this one's huge. Imagine that before a big announcement, most traders are already positioned the same way. Maybe everyone's bullish on the dollar, long on gold, or waiting for a crypto rally. In that kind of setup, even if the news supports their view, the market may not move further because there's no fresh fuel left. The people who wanted to buy already did. And that's when you see a good report, but no price jump simply because there's no one left to push it higher. Then there's liquidity. Sometimes a piece of news is theoretically important but falls into a thin market with little depth, or conversely, it lands when liquidity is so high that the shock gets absorbed effortlessly. That's why the same piece of news can spark totally different reactions depending on the timing. For example, a major US economic report might only cause mild swings during a busy session, but if it hits a quiet market where traders are just waiting for an excuse to exit, it could cause much bigger move. Timing matters too. Often a major news item arrives at the wrong moment to make an impact. The market might already be focused on a stronger narrative, and that new piece of data just isn't powerful enough to shift attention. You see this a lot in Forex. A strong number comes out, but everyone's still focused on interest rates, central bank tone, or geopolitics. The same thing happens with gold. A hot inflation number might drop, but if traders are more focused on dollar strength or bond yields, gold hardly moves. And in crypto, we've seen countless times when big headlines get overshadowed by themes like ETFs, capital flows, or broader risk sentiment. There's also a more subtle professional point here. At times, the market appears quiet after major news because the information doesn't offer enough reason to shift the existing trend, and that difference matters a lot. Not every big headline creates a new direction. Some just cause a quick spike, some wipe out stop losses, and others simply give traders an excuse to take profits. So if you expect every big announcement to move markets dramatically, you'll burn out fast. The significance of news depends on how it connects to the market's overall story. That's why, whether you're trading Forex, gold, or crypto, the real question after a major release isn't, was that a good or bad news? It's, what did it actually change? Did it shift expectations? Did it shake up existing positions? Did it alter the main market narrative? If the answer is no, then it makes perfect sense for the market just move on like nothing happened. So, next time you see the market ignore a huge headline, don't assume it's being irrational. Maybe it's just being more rational than you think. Market behavior is driven by expectation gaps, existing positioning, liquidity conditions, and timing. Factors that carry more weight than the headline itself. And if you don't understand that, you'll keep asking the same question. Why did nothing happen after such big news? Before we wrap up, here's something to think about. Have you ever seen a major news story break and the market barely move? We'd love to hear your experience. Which market was it? And what did that moment teach you about how price action really works?